Good day, folks. This is Chris Toron again, checking in for TradeTaxPlus for the final video of this month. Still dealing with the increase in the VAT rate. In this session, we'll just have a quick look at what are some of the special rules that apply. Now, it's mainly in respect of the supply of fixed property, and when it comes to fixed property, only in respect of a supply of a dwelling. Now, as you may know, that a dwelling is a place where you and I live. It's the house where we live. So it must be intended for residential accommodation, which is sometimes we call it in layman's terms. It's houses. That's what it is. Now, to avoid houses all of a sudden becoming more expensive than you thought it would be, there are quite lenient rules. So to govern the increase in the VAT rate. So first and foremost, the sale of the property will only be subject to VAT if it's sold by a property developer. So that's their trading stock. And you and I, if we sell our property, we don't charge VAT. And also, if I have a property as a VAT vendor, but I use that property to rent it out, that's not part of my enterprise. So when I sell that property, there is no VAT on it in any event. So that's a non-issue. So when a property developer sells a property, the old VAT rate will still apply, provided you've entered into that agreement before 1 April 2018. So that includes transactions concluded in the what we previously called the window period. In other words, before, from the date that the minister announced the increase to the date of the actual increase. So that's fine. You can enter into those agreements in that time. The price must have been fixed, and the time of supply for the property must be after the 1st of April. So that would be registration in the deeds office or payment received. Under those circumstances, you'll get the 14% will still apply to that property. Now keep in mind, if you enter into a property and that time of supply is triggered before the 1st of April, then it's 14% in any event. So the only requirement is that to retain the 14% is that the contract must also state that VAT is included in that transaction at 14%. And that's basically all as far as it goes with fixed property. Other fixed property, commercial property, the normal rules apply. So if I buy a property today and registration only takes place after 1st of April, that's a 15% transaction. Keep in mind the 21-day rule does not apply to fixed property. So if it's registered on the 1st of April, that is a 15% property. When it comes to lay-by sales, remember those are sales where you determine upfront, you put essentially a deposit down. They almost set aside, I think that's the term they use, goods you want to buy, and when you've paid the full purchase price, you then account for VAT at that time, and you get your goods. Now, the transitional rule simply says if you've entered into a lay-by agreement and you have paid that initial amount, which is normally a deposit of whatever the number might be, then when you subsequently take possession of those goods and make subsequent payments, the 14% is retained in the purchase price. It remains a 14% supply, irrespective of it being collected after the 1st of April 2018. Remember, there's also another rule that says if I've made a deposit or a payment in terms of an installment of a lay-by agreement, that payment, and I forfeit that payment because the agreement is cancelled, then that's income in the hands of the person that has provided the lay-by facility, otherwise the seller. Now, the seller then has to account for output tax on that transaction. That transaction, if it relates to a transaction concluded before 1 April, is still subject to 14%. So as what you've probably seen in the last 3 videos dealing with these issues is it's not so much a very VAT technical issue as it is how on earth are we going to do this from an accounting perspective. Because now for a certain period of time we have to track not so much the time of supply in terms of earlier of payment or invoicing, but we have to track physical delivery, and we have to track physical rendering of services. And that could be really, really challenging in large organizations with complex systems. Various submissions are being made through various professional bodies to SARS to just tell them what the issues are. And hopefully we'll come to some kind of a solution in terms of the difficulties and the practical difficulties that will be experienced over this time. But for me, for now, it's Chris Teron checking out for TradeTaxPlus, Center of Excellence.